All right, how's it going, everybody? This is Tim with King's Options, and let's go ahead and jump in here. We're on the sector tracker, so let's look at the sector tracker. Just because we're here. Here we go. It looks a lot like last week. Honestly, go check the last video. You can see it. Not really much has changed. Everything's looking fine. And my personal favorite, Infotech, is actually on the downside this time, which, when you look at the charts, isn't too much to see. I did find it interesting if you go to year to date. You're seeing this, but that's, it's February. If you go over 1 year, the only thing left negative is saying real estate. In 5 years, everything's green. So we're on the plus side here. Things are rising pretty well. Staples, industrials, materials, energy, not real surprising given everything that's been going on in the political scene, socioeconomics. All right, let's go to the economic release calendar for this upcoming week. Market movers. And you can take a look at all of them if you want. I like the heavy impact ones. That's what I want to see. So Tuesday we've got sales data, supply demand, supply demand, supply demand. Sales data is going to be the one we're really worried about, at least in my trading time period. And that comes out as 7:30 Central Time. Wednesday, employment situation and petroleum status. The employment situation is, of course, going to be very carefully watched, mostly for determining rate cuts, things of that nature, or rate hikes, or leave it alone, whatever. Thursday, of course, the unemployment situation, as well as existing home sales. Different times. Keep in mind that the existing home sales comes out 9 o'clock Central, 10 o'clock Eastern. On Friday, we have CPI. So that should be that's going to be a market mover. Doesn't matter what this says. CPI is going to be a market mover. We'll see what happens. Right now, they're predicting basically no change. So let's go here. Earnings whispers. All right, here's what we got. The most anticipated earnings releases for the coming week. Take a look at the names. Do what you do with them. It's funny. I used to trade. I used to trade earnings pretty heavily. Had some very specific strategies that I used. Worked really good. Iron Butterfly is my particular favorite, my top favorite to do with earnings on not the top names, but on like the sympathy play names that are also going to move based on what the bigger name that is associated with goes with. And yeah, but I don't play earnings anymore. I am strictly a futures trader. Kind of moved over to that. And when I say strictly, I do mean I still put on a few very select options. So there's always caveats to everything. Um, but yeah, a few very select options trades. Either way, we've been sitting here long enough. You know where it's at. Go look at it. If you need more time, pause, copy, whatever you got to do, and moving on. All right, here's the charts. My goodness, my goodness. So we had quite the little downstream, and look at this, man. RTY, this is crazy. RTY didn't just pop back up; it popped back up to what is potentially the edge of a liquidity pool on the top side. That's nuts. That's nuts. Huge move for the RTY. That is gigantic for the RTY. So kind of crazy. Um, you can see on the way down, we did actually hit this first level that we had already determined by this floor that was in here, and then we came down and we dipped below uh, this top that we had set here into just some more like wicking areas. This one did close, but the next day it popped right back up. So, but this level was definitely important. Still got now, if anything, and we'll see how this sets up. This right here, from let's say there to this lower point, right? This is going to be a liquidity pool at this point from this swing low, which we could adjust it based off this, but right now this isn't a swing low. It turn around and drop lower, it's just moving downwards. But at this point, from this swing low, this is a liquidity pool that is very possibly something that could be significant. All right, moving over to the YM. Oh, YM's kicking everybody in the teeth. as all we did was drop down, hit the 50, and boom, right back up and set a new all-time high by a significant amount, no less. I mean, not just a new all-time high, but we said, what was this? Is basically round up 49.9 to 52.63. So we're talking 360 points. That's pretty impressive for that turnaround. Let's go take a look at why we're going to leave. Actually, we're going to reset this. I should say add to. Honestly, I should set another line to see if we come down and test this top. And I'm going to do that. I'm going to do that. I'm going to put a line in here. And we're going to say, take an average of, I like there. And we're going to put it right back there. So let's see if wherever it decides to say, hey, I'm at the top. And keep in mind that we've still got room to go. So this green line's your 21. Here's your third ATR. ATR? I'm an idiot. Here's your third standard deviation, Keltner channel, off of the median, which means we're only about 2. There's plenty of room to run to the upside before she turns around. But let's say she does. Do we respect this top? Prior resistance turn support kind of action, and resume our upward push. So just something to keep in mind. Either way, we've still got the smaller liquidity pool here at the bottom, which we didn't quite dip into, and then larger one below here. I'm not going to mark below it, but it starts here. Yeah, we're way far away from that right now, so I'm not going to worry about that too hard. All right, let's go over to ES. ES, what happened? What happened? We had a few ugly days, very ugly day on Thursday, and then Friday came back around, kicked it in high gear, and recuperated. I mean, it really engulfed the prior 2 candles if you're only counting bodies, right? Obviously, the wicks didn't quite work out here, but close enough that we reduced 2 prior days' movements to the downside. And even with these 2 being as severe as they are, flattened the average with this one candle. Now, was that one of those things that's like everybody's simply defending as we're approaching a very large liquidity pool? Possible. Definitely a possibility. Or is this a real move? These things happen for a reason. I'm not going to go into that. These things happen for a reason, and then this is the resulting return of the movement back to the upside. Either way, you still got to look at the fact that right up where we are, where we closed, look at this. This is all price consolidation. It just moved sideways and it's oscillated around that area. Yes, the swings have gotten a little bigger, but it's still our closing price is right in the middle of all this price mess. Okay. So this is an area to look to break out of. Of course, the breakout to the top side is going to be to break out above and put in new all-time highs. And a breakout to the downside would have been this right here with a continuation downward, but it didn't happen. It immediately turned around. So it would have to work its way down again and break past into this small liquidity pool, which I'm pretty sure is probably dried up by now, into this next liquidity pool. And again, I'm going to leave this one here. I'll probably, we'll just delete this one. This is kind of a non-factor. Because everybody that's in here set their stops going to be down here, which is into this liquidity pool from here to here. Now, that being the case, if we get a couple days over here, then we're going to shorten that liquidity pool by moving this down to this as the swing low. But we'll see how that plays out. All right, NQ, our latest and greatest favorite is to trade, and by our, I mean mine. We got the all-time high marked. Oh, we've got a nice little resistance level here marked, our prior resistance level. We peaked above and dropped back down, respected it, dropped down again. Now here, we've really been playing around in this good-sized liquidity pool. Is that the biggest liquidity pool? No, it isn't. Next one is here to here. Might even be here. I'd still call it here. But, good size. I guess this is a bigger liquidity pool, but we've soaked up so much of it within 1, 2, even a third day. We got some price action into that liquidity pool. It's still valid. We haven't closed the pool up yet. We haven't drained necessarily all the orders that came from here. These guys are hanging on like, whoo, didn't take me out. So very possible that some of them folks are still holding on. If they're smart, they took profits anywhere in here, 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 or here. Who knows? So it's the same story as the ES, right? Is this a turnaround? So we took out the prior day. If you count candle body, we got an engulfing candle. That's a good look to the upside. We are below the 21. We did basically come away from an almost third standard deviation. So if you look at this from, bear or bear bull side, we're still on the bearish side of this. This is a good look. Don't get me wrong. It's a good look coming up. It's a strong bullish candle, but it could just as easily rise up, hit the 21, bounce off. Also, look where we stopped, right? So if this is a prior support, is this simply saying, okay, prior support now becomes resistance and it kicks back to the bottom again? Could happen. You saw the sector report where technology, which is what the bulk of the Nasdaq 100 is going to be based off of. But you saw the sector report that showed that technology is not sitting in a good spot. So we can see a couple things here. I'm not going to move any of these lines. I am going to delete this one because, again, this liquidity pool is gone, absolutely gone. So now we're still looking at, I'm going to play with this as a liquidity pool. Then I'm looking at, if we dip back in, do we soak up more of these sellers in this area and reverse again and carry on upward? Or do we break through, sellers take control and push us down even farther? Basically, Thursday and Friday are a net zero on movement. So we're still stuck with this. Yeah, that's the way I'm going to look at it. We're below the 50, we're below the 100 as simple moving averages. That's the white line and the purple line. And we've got a downturn in the Fibonacci numbered EMAs that make up this particular 21. We're still technically probably between 1 and 2, probably right around closer to 2 than 1. It could be, no, sorry, probably 0 and 1. Yeah. So right about 1 standard deviation. I don't know what was in my head there because that would be like right here would be 2. But anyways, so probably 1 standard deviation away from the mean. We could come back and see the mean and reject it. It would be very common from this point. So this is the most negative looking of the charts that we've seen. And it still is not in a horrible, horrible, horrible spot. It's just got the most catalysts. It's got the most factors stacked against it to be bullish. And we shall see how that plays out. Remember, trade the markets that are in front of you, not the markets that you want them to be. And you'll be fine. And with that, I'm going to leave you, and we will talk to you next week. Thank you. Bye.